Great. Welcome everybody to DCA, where we take some of the top things that are going on, just give you our perspective. As always, a friend of the show, James from Invest Answers is here. James, thanks for stopping by. Really appreciate it. And also, we've got Guy from Coin Bureau making a special guest appearance as Ben is out being sick just a little bit. So Guy, thanks for stopping by.
It's a pleasure. Thank you for having me, gentlemen.
Excellent, excellent. So just real quick, what we're going to talk about today is a couple different things. First of all, we don't want the market to go up forever, but what are the positives of the bear market? Second thing is, how big of a discount do you see Bitcoin and alts going by year's end? And then there's a question from yesterday, military service member who has 10 years until retirement. He talks about investing into crypto. How would you guys play it if you had 10 full years to invest? Next to last, dynamic DCA versus steroid DCA, or just set it and forget it. And that'll be playing off of James' video yesterday. And finally, when to take profits and not get too greedy, because let's admit it, we all got greedy. And in honor of Guy being on the show, my man James has wrote a little soliloquy, a little poem to welcome into the DCA family. James, wow. This is you.
Yes, Guy. I've got a big boots to fill, but I'm going to try this on Guy. I am James, and I brook no games. Questions have you all? Oh, so many. Answers, will I have aplenty? But tarry, please don't hurry. For financial advice, they'll be nary.
Nice. Excellent work, James. Excellent work.
Wonderful.
All right, gents. So let's get to it. We're trying to keep it a little bit light because let's be honest, everybody here, first of all, welcome. We know that today and the last couple of months or so have not been the most bright, we will say. So we have to take a look at the big picture and just take a step back and see exactly where we're at. And this is why I called these two gentlemen in to help me out. So the first thing is, and I want to ask, I'm going to start you with James. We want the market to hit all-time highs all the time, constantly. But what are the positives of this bear market? Because it's a natural cycle. And I think the narrative, we have to switch it a little bit to get us in the right mindset. So James, what do you think?
Oh, interesting question, but there's an easy way to think about this. And as you guys know, if you know my channel, I love numbers, numerology, threes, etc. And this could turn into a show of threes because DCA is three people. But think about this, everybody. Think of the numbers $30, $300, $3,000, and $30 where we are now. What do they all have in common? This is the pattern of Bitcoin. Every cycle, like clockwork, and that's exactly where we are. And it's funny, like we're at 30,000 right now. We know we're going to 300,000 one day. We just don't know when. Is it going to be 3 years, 5 years, 7 years from now? Somewhere in that time frame for sure. And that is the beauty of this. So the beauty of these bear markets, if you go back to even March 2020, which is not that long ago, I was buying Ethereum at $90 and Bitcoin at $4,000, $5,000, $7,000, $9,000. And look at it today. I know people are expecting much bigger numbers much faster, the whole GRQ phenomenon. But literally, everybody just zoom out. This thing is so scarce. 8 billion people on Earth will want to have some, and there's simply not enough to go around. It is the most beautiful supply and demand scenario set up, asymmetric bet of our lives.
Couldn't agree more. And I'm hoping to see more of that. So, Guy, your first question. So, look, and you've got a pretty enormous channel, and you've been doing some live streams, taking questions from people now. The sentiment's a little bit different, but what are some of the positives you see for this bear market? And is there, if there's anything to it?
Yeah, I mean, there are a ton of positives, really. I think for me, perhaps the biggest of them all is just less noise. And, noise encompasses a whole range of things. There's less hype, there's less pressure, there's less, sense of FOMO and stuff. And I really do think that FOMO in particular is such a powerful force, especially on, less experienced investors. So, but this idea, this less noise, just general noise in the space, I think is so important because it means that project fundamentals can shine through. And it means that for those who are, willing to put the hours in, willing to do a bit of time on the research, they can filter out all the stuff that doesn't mean anything. They can filter out all the useless information and just focus on what counts. A strong use case, a good team, good investment, all these really important fundamentals. And without having to worry about oh, am I missing out? Do I need to get in now? Have I missed the boat? Because we get asked that so much, don't we? And so, have I missed the boat on this particular point? And a bear market is the ideal time to just park all that to one side and focus on what's really important.
Yeah, that's a good way. So like for me, like I think of bear markets, and just to piggyback what you guys say, it's true. I mean, these are the times when the noise gets pushed out and people will say, well, how's that work for growth? Remember, in our last big economic crisis back in the 08-09 times, I mean, there were some pretty big companies that grew from that. Venmo being one of them in 2009, Groupon, Instagram, Uber. I don't know if you have ever heard of these companies, Slack, Square, stuff like that. So there's just that one part. The noise gets pushed out. And I got to tell you, in my personal opinion, and we've seen this on Twitter because we're very active in those communities. How many times have we seen rug pulls and people getting scammed out of their life savings and things just going away? Those things need to go away. And there's only one opportunity for that. And that is in this bear market. So I'll say that. And then lastly, of course, some nice discounts. I know people want to hear that, but it is what it is. So that would lead me to my next question. How big of a discount do you see Bitcoin and alts going by year's end? So Guy, you're up in the top corner. I'm going to ask you this first. Where do you think we're going by year's end? And you can say it, whatever timeline you want to go for. Sure.
Alts is a really, really difficult one to call. So, I mean, I'm going to start with Bitcoin. I mean, I think Bitcoin can go as low as 20K, and obviously that's that was the high watermark of the last bull market. I think, I would be surprised. I mean, I could be wrong, and I'm perfect. There's a good chance it could fall below 20K, but certainly I'd be surprised if we saw a BTC sub 20K. I think as investors kind of cycle out of alts, because let's face it, people are going to continue taking profit on alts. There are still plenty of people who have got a profit to bank, even in the conditions that we're in. I think a lot of that money that bleeds out of alts will find its way into Bitcoin and ETH as well. And I think that sort of buy pressure should be enough to keep Bitcoin above that 20K mark.
Yeah, that's a good one. So James, same thing, same question to you. How low are we going that you think? And of course, everybody, none of us have a crystal ball. As smart as these two gentlemen are, they cannot tell you the future, but we can take a look at some good data. James, what do you think?
Yeah, again, I look at a lot of on-chain data, a lot of technicals. I look at price levels at which buyers come in. If you're talking about Bitcoin specifically, which is a lot easier maybe to estimate than the altcoins after what happened recently. Every time we dip down to that 28.5 level, you see big buyers step in and just stack. And you see that in the cohorts on chain as well that are accumulating. And people now are wise enough to know, okay, dips are opportunities. We are at kind of historic lows for this place in the season. We did hit that 25,400, but we were there for a matter of minutes and then straight back up again. So a lot of people are talking about that 14K level, the 12K, the sub 10K, the 20K. I just do not see 20K. I definitely don't see 14K happening unless something really, really bad happens in the economy. Now, we are going into a macro environment where QT is going to happen for the first time in a long time. That's quantitative tightening. And we don't know how this is going to play out because this actually hasn't happened in 50 years. I know it's meager compared to the actual size of the balance sheet, but it could have an impact on credit markets, which could have a contagion effect on other markets, and that could knock on to Bitcoin. But I've always talked about the fact that I do believe Bitcoin will ultimately be a safe haven. And I also know that this bear market shouldn't last more than 100 days longer. We're considering we're in about 120 days now. Because after that, whatever's going to happen with the Fed and QT hiking, etc., that has to give, I estimate, the next 70, 85 days, then we'll know that they're going to stop, and then markets will really rally fast. And that's when you want to be on the train. So when that does happen, so floor, we might get back down to 25K. If something really bad happens macro-wise, we could go to 20K, possible, but it's a edge case, 10% probability event of happening. In terms of what happens after, we definitely, by the end of this year, we'll get back to all-time highs and potentially 80K. I don't see 100K this year.
Oh, no. Yeah.
Now, and then in terms of the altcoins as well, final point, people have just gotten a black eye after what happened with Luna. And because of that, everybody's extremely gun shy. So you're seeing much more flight to safety. But again, some of the alts that have tremendous compelling value, revolutionizing traditional finance with DeFi, they are very oversold right now. But Ethereum, for example, is showing very good support at that $1,700 level. So hoping that holds. If not, that could be a bad omen.
Yeah, I gotcha. And a couple of things, like I would have not agreed with you on some of those points if it wasn't for the fact that over in China for the supply chains, Shanghai just opened up and they're trying to get back to helping out with the supply chains and getting and filling those demand. If it wasn't for those types of factors of I don't know, because the Fed can only do so much. They can only tighten so much, and you talk about that on your show. And I think that once they start to see if things start to break, then they'll have to pull back. So there is that aspect of it. All right. So as far as that one, that was the bad part of what's going on in the macro environment and in our crypto space. So the next question would be this. Let's take a look at and zoom out a little bit. This was a question from my live stream from yesterday. It was a military service member. And he said, Rob, he goes, I put in 10 years. I got 10 years to go before I retire. Do you think I can make enough in crypto to retire successfully and not have to work after that for 10 years? And I thought about it. And I go, a lot of people don't think in 10 years. What do we think about? A lot of people think the Dogecoin millionaires think in 6 months or shorter. So that is the big question. If it was up to you and you had 10 years, how would you handle this situation? I'll switch it up a little bit. Guy, what do you got here? You got 10 full years to invest. How do you play it?
I think first off, just DCA. Start slowly. Identify those bigger projects that you want to get into. I think because 10 years is a long time. He's got time on his side, so he's got time to do that research, to look into those fundamentals, to see which are most attractive projects are. And I think also, it gives him an opportunity to really sort of diversify. And I think by that, he wants to get a good kind of base of BTC and ETH. And I think also some alternative layer one plays as well. And I think crucially for someone who is looking at retiring, he should have a focus on passive income as well. And I think that's where staking can really help. So I think that should certainly inform his strategy to a large extent. How can he put some aside and keep that income coming in? And lastly, I'd say it would especially important for someone in that situation to diversify as much as possible, not just in the makeup of his portfolio, but where he's keeping these coins and tokens as well. Because retirees can often be the most vulnerable group, I think, especially at times like this. So he needs to make sure that he's got that portfolio nicely spread. He's self-custodying what he needs to self-custody. He's got himself spread across multiple platforms as well as multiple good projects.
Exactly. And then before I go on, I got to preface it with this. This guy, he's going to retire in 10 years when he turns 38. So think about that. He's 18 years old. He went in the military. He is now 28, and he's thinking that far ahead. And I think that's a great lesson for all of us to think about that way. All right.
My day. And that, in fact, that's one of the things that has actually radically changed in this world is for the first time ever, you have young people, teenagers understanding the impact of money printing and macroeconomics and the Fed and government corruption and everything else. Everybody now is wise to this, doing their research, building models, planning retirement at 38. Yeah. That's the best thing I've heard all day.
Yeah.
Thank you for that.
Yeah, I've heard from teachers here in the UK. They overhear their kids talking about crypto and all these coins and stuff, but they say they also hear them talking about things like DCAing and staking, you know, and sort of more sort of general financial terms. You know, they're all seem to be clued up on what the next interest rate rise is going to be, on, you know, Fed policy and things like this. It's an amazing thing to see, because certainly in my day, we never had anything like that. We couldn't have been less interested in that sort of stuff. And I think that's a great hope. That's a great hope for the, you know, for the generations coming up behind us, because they're learning what's really important.
Yeah. Well, I mean, that's just it, because I mean, we're all at that age. We remember before the internet. Before the internet, where'd you get your news? Where'd you get your information? Well, it was the Dewey Decimal System in the library, also the mainstream media and newspapers. There's nothing that would put out like this. So now people kind of go, yeah, I need more financial literacy, because me just working 9 to 5 for the rest of my life till I turn 65 and then trying to rely on a pension is not happening. So that, I think, is a big thing. All right. So we answered that question. Go ahead.
I do have some opinion for this serviceman. I do echo the fact that Guy said have passive income is super important. But if you just look at, like, I've been building price prediction models for Bitcoin and stuff for 4 or 5 years now. So my bear case for Bitcoin by 2030, which technically is only 8 years from now, is quite high. It's like bear case is about $576,000. So if you're looking to retire at the age of 38, you need to think about, okay, how do I supplement my life for 40 years? And what will life cost over the next 40 years? And that's where it gets really tricky. And remember as well, having 2 Bitcoin, for example, by the year 2030, yes, you'll have maybe $1.2 million bear case scenario with 2 Bitcoin. But you've got to remember as well, the purchasing power of that Bitcoin is going to come down by at least 45%. The purchasing power of the dollars that the Bitcoin value is in. So start thinking in terms of Bitcoin valuations, not necessarily dollars. And the bull case I have is about 1.55 million. And my expected case is at least 785K by 2030. He's another 2 years after that. So who knows what'll happen. But once it does go parabolic, it'll go up very, very fast. We just don't know when that is. Once the supply really dries up, just think about those 8 billion people chasing after what effectively is less than 14 million Bitcoin that exist. Don't believe the 21 million number, because so many are lost.
Yeah, that's exactly right. So James, so talk to us. I mean, because that whole thing, if you had 10 years, because you're more of a trader. You've been doing this for how many years?
30 years.
Yeah, exactly. 3 decades. I didn't want to overextend that time frame. I want to be polite. So we're talking about 3 decades. How do you play this in 10 years? What do you do? How does this work out? Is it all just trades? Is it all, or is it a little DCA, or what? How do you work it?
Well, I believe, again, going back to the threes, I kind of believe you should have 3 bags of stuff. One should be, you know, your passive income source. It could be rental properties. One is kind of your hodl bag, your really, really safe assets. And the other third could be more of your speculative assets. And within those, you do different things. You have a certain allocation that you never want to give up. So for example, you have X number of Bitcoin. Nobody's touching those. You've got Y numbers of shares of Tesla. Nobody's touching those. They're just locked away. And then you have other stuff that you play, you swing trade, you hedge as markets develop. And I think that is kind of the way I play the game.
Sounds good. Yeah. And then just kind of to bring this all home, to talk about what Guy mentioned, and then what James talked about as far as those models, is there's this great website. I don't know if you guys have seen it. It's a friend of the show, Ben Cohen, and his app into the Cryptoverse. And I love this one where he talks, it's the crypto market cap and trend line. Let me see if I can blow this up. And what James was talking about as far as 10 years moving out, this red line right here is the fair market value. And you can see right now we're just a little bit below that. But if we can extrapolate that and go out just to follow this line, let's take 2030. 28, 29, which is only 8 years. So that service member, I think, is going to do pretty good. The fair market value is $46 trillion. Upper band is 186 trillion. Lower is 13.2, but I haven't really hit that too much. So James, would that fit with the model that you have?
That's way more aggressive than my model. My model is very heavily sandbagged, but 46 trillion, that's the entire CMC, isn't it? Crypto market cap.
Yeah. I don't know. Not just Bitcoin.
So you can extrapolate that. That's a 46x from where we are now. So you could do your math at home. 46 times 30 gives you the high end target. But again, you have groups like at Fidelity. They have Bitcoin at $1 billion by the year 2037. I know people may scoff at that idea. Kathy Wood, $1 million in 5 years, 8 years. Pretty easy judgment. So it's just, again, it's the most perfect supply and demand situation in the world, because you don't have to worry about supply. That's defined. It's just about demand. And look at the adoption. That's all you have to worry about. And it's pretty easy to model from there on.
Yeah. So when in doubt, zoom out. I know today's awful and we're looking more of a bear market. Just remember, long-term horizon.
Absolutely. Absolutely. Has Rob, are you frozen there?
I think so. We may have lost him. But anyway, by the way, while we're talking about those numbers, that multiple going out puts Bitcoin at least at $1.5 million a coin based on 2030 Ben's model. That's weird that we're here and Rob is not running the show.
Yeah, we'll just have to take it from here. But yeah, I mean, it's heartening, isn't it? And I think especially at a time like this, when there's so much, when sentiment is so low, when people are looking at their portfolios and just seeing just a sea of red, the importance of a long-term perspective. And I think it was great that Rob chose the example of that of someone looking to retire, because this is what it's about, isn't it? Crypto investing is a long-term thing, and I mean that the same is true of regular investing as well. The people who win are the people with a long-term view, who are content to put money aside today, and they know that's that they're not going to reap the benefits of that anytime soon. But that's okay, because they have this long-term view, and I think that's what one of the most important things to remember in a bear market. Not only are we here for a long time, but also these things are cyclical, aren't they? We're in a bear market that we've all seen coming, and we've been trying to predict it and trying to imagine when it would come. But it has come, and we knew that, and that shouldn't really change a good investing thesis.
Exactly, and the way I always look at it is, when I've been successful in my life, is identifying an opportunity early, getting in hard, and holding on. That's it. So, but sometimes, theses change. For example, I was early into things like Google. I was early into things like Amazon and Netflix. I was early into Facebook, but then I didn't like Facebook and got rid of it. And I sold it a little bit too early. So,
like Peter Thiel.
Exactly. Yeah, so that's how it works. I don't know if Rob is coming back, but we do have I know he wanted to talk about a couple of other items like DCAing. Do you have a particular DCA strategy yourself that you recommend, or what does Guy do personally for his own bags? Do you like to buy more aggressively on dips?
I do, yeah. I mean, I do try and stick to a fairly rigid DCA strategy, especially at times like this. But I mean, yeah, I'm not averse to piling in when I see a dip, and when I see what looks to me like a nice opportunity. Having said that, I mean, to sort of play devil's advocate on DCA, I think one of the great things about it is its simplicity. I think that's one of the things that really appeals to so many people, either who don't have much experience of investing, or they just want to put some money away and get on with it. They don't have the time or the inclination to keep looking at charts and keep evaluating the. Oh, he's back.
Sorry about that, Gary. Gary Gensler just cut my cord. I don't know what happened.
Did he just abseil in through one of those windows behind you?
Yeah, exactly. It's one of those things that happen. Sorry about that. So technology is great until it's not.
Live TV,
baby. That's how it goes. That's okay.
The joys.
So, go ahead.
Yeah, Rob, we just gone on to talking about DCAing. In general, okay. I was just saying, one of DCAing's sort of best aspects of it, I think, is the fact that it's so simple, is the fact that it doesn't demand so much from an investor, you know. And I think there are plenty of people out there who, as I was saying to James, they want to invest. They want to put some money away for the future, but for one reason or another, they might not have the inclination, they might not have the time, let's face it, to keep a close eye on the macro situation, on what's happening in crypto, what's happening in stocks, what's happening on the charts, etc. And that, I think, is the beauty of DCA in a way. It's so damn simple.
Yeah, I gotta agree. And then James, you did a great video yesterday. I watched it twice on the DCA and steroids. Very good stuff. Very great. So I don't know if you've already talked about it, but if you haven't, please do so.
Yeah, well, the interesting thing about it is it sounds really simple. And yeah, sometimes the best things in life are the simplest things in life. But I've always approached it from more of a, how do I say, I want to get more bang for my buck. So I had always had this principle of, for example, in the last recent times, I don't buy Bitcoin above 42K. My DCA stops, but I allocate cash, build up my cash pile. And I was trying to build out a formula on how to optimize that whole concept. So I had this idea of DCA and steroids. I've kind of leaked the approach many times online, but decided to make a formal video because it's such a great time to either lump sum buy now because we're at historical lows, or build in a process for the coming period of time. So it's very important, first of all, to look at time series investments. And then what I typically have done is park money. Imagine you've got $100 a week to save, park that, but then you start deploying at an accelerated pace when you get beyond a certain distance from all-time high. Because think of Bitcoin being up and down like a jagged edge, with the overall trend going up. But when you do hit an all-time high, there is a high chance of mean reversion in most cases. And that's what you wait for. So the key threshold is like 35% from an all-time high. Then you start deploying 40%. You start deploying, like, instead of $100 a week, 166, 45% from all-time high, you go to 264, and more than 50% from all-time high, you drop all your cash. And when you do that, you basically can beat traditional DCA by 20% or more. And that doesn't even include putting your coins and stable coins and earning 7 or 10% yield. Then you can easily make 30, 35%. And that's kind of what's fun. So that's just one of the lessons. But remember, everybody, as well, this is time series dependent. There'll come a time when Bitcoin will just go back into a bull market, and especially up to the next halving. And that's when you want to be on the train and deploy as much as you can, because that's when DCA really is effective and timing your buys is not effective. So always bear that in mind, everybody.
Yeah, time. It's so time sensitive. You've heard of Diddy from the Bitcoin family, right? Gentleman that put everything into Bitcoin. When did he do it? The very beginning of 2017. He sold his boats, his cars, his houses, and his business, and went all in on Bitcoin. That is like the perfect time of all perfect times. If we can hit that timing, I will never hit that timing. I will always sell below the top and buy before the bottom. That is just how my strategy works, because I'm not Nostradamus. But the next thing, all the different projects are laying track right now. They're building, they're trying to absorb other projects. They're doing all the great things. The things that we should be doing as investors is thinking about taking profits. And that, I think, is a big issue for a lot of people. And you watching at home, I know you got greedy. I know you did, because I hear in the comments all the time, you got greedy, you didn't take as many profits as you should. So, gentlemen, how do we do that? I'm going to start with Guy, and I'll finish off with James. How do you take some profits, Guy?
I think one way you can look at it is to, you DCA in. Why not DCA out as well? Why should it not cut both ways? I think that's a good way of doing it. Because what I think you want to do is try and take the emotion out of it, because we all know that amazing feeling where the coin that we've lumped on, we see it going up and we just think, and we have that voice in our head, don't we, going, you said you'd get out at this point. You're not out. And then the other voice saying, well, but no, look at it. It's on a tear. It can go higher. It can go higher. And then you go to bed, you finally take yourself off to bed. And then the next morning it's gone lower, and you've missed that shot. And I think any way that you can remove that emotion from it. I think sometimes emotion is our biggest enemy. We say it's that old adage, isn't it? The person you're battling against is you. you're fighting against yourself. So anything that I think, looking to dollar cost average out of a position in the same way that you DCA'd in, I think there's a definite case for that. I think also as well, obviously this involves a degree of risk in that you're committing to keep crypto on an exchange, but you can set up a sell order. You pick your realistic price points. You pick a price that you're going to exit at. Whatever percentage of your position you're going to exit, and you set up a sell order on a regulated on a reputable exchange, and you let it do its thing. Because again, I think I've done it, and I'm sure most people watching have done it as well. It's just you should push that button, but you can't bring yourself to. So try and remove the emotion from it.
I can agree there. So let's talk to somebody who has no emotion in investments. James, I think, is one of the masters of this. James, how do you do it?
Well, it's funny because I find it far easier to trade equities than crypto, because crypto is not driven by logic, but equities are. So I remember I was on Meet Dave. He's a top Tesla analyst, and he was stunned that I shorted Tesla at $1,200. He was like, what are you doing? It's like, well, the cost base is about $38, need to take some profit. So I'm very good at timing swings, but I think the truth is most people got caught out by plan B and 100K Bitcoin and then the run and everything else. And I think that was a bit of a problem. I actually started a series called Should I Sell back in September, October, things like when to layer out, what prices to layer out certain assets. And I remember Matic, I think I hit the first layer at $2.70 and then the next one like $2.99. And I only hit the first one and then the market came crashing down. So timing is everything. And I think, we were all caught out, but remember as well, we were hit with a bunch of stuff that like a perfect storm of badness between Ukraine invasion, between hawkish Fed, between what was the third thing? Luna imploding. Yada, yada, yada. I mean, this just smashed the market. But we'll be ready. We'll fight again. And in terms of kind of what I said earlier, though, taking profits, if you do own a pristine asset, allocate some that you're not going to touch. Your hodl bag, lock it away, and then play with the rest. Think of having 60% of your bag being, okay, this is my Bitcoin or my Tesla or whatever your pristine asset is, Ethereum, and then keep that and then layer out of the other stuff that is riskier, just speculative investments. And that's the way people really need to think going forward, because we've been surprised by a bunch of stuff. People like Raoul Pal talking about $40,000 Ethereum back in Christmas. And of course, but it was just so much exorbitant bullishness. A lot of people fell into the trap.
Yeah. Look, Guy's been here. Guy, you started investing in 2014, right? Around that time? Yeah. I got in 2017. James, you've been investing, but got into crypto in 2020, somewhere around there. Even though we know in the back of our, 27, even though we know about these things, it's still that voice in our head to take the profits. And I will tell you this, in end of November, early December, I was not happy when I had to take profits to purchase some real estate. And I thought, man, I'm going to miss out on this huge opportunity. But it was the best thing of all time. So from now on, and of course what happened with Luna, from now on this channel, every time there's a little pump, I always say the same thing. Nobody ever went broke taking profits. Yes, at some point you may miss some massive things, but be safe as opposed to going all in and losing everything, because I'm tired of seeing those emails and quotes. All right, gents, thanks so much for stopping by. That concludes the question part for the I have. Now, if you got time, let's jump in and just have some of the people out there see what they got for us, shall we?
Yeah.
All right. So I started some as we were talking. James is the GOAT. That's what it says.
Agreed.
Get well soon, Ben. Yeah, I've been watching. I watched Ben's stuff, and he did not sound too good when his last couple of videos. Beardy says, "Man crushes." That's very nice.
Oh, that's nice.
Thumbs up. Guy is first class with Rob Ben, of course. Where's George? George was the original trifecta. But then George does 3 streams a day, and he also has a car channel. If you haven't checked it out, check it out. But he got too busy, and I didn't want Ben to get burned out. That's why we gave him a break. Let's see.
Yeah.
Okay.
We're going to stress Guy out instead.
I bought all. Yeah, exactly. I bought all this. All I need to retire in 2030, according to James's plan. I like that.
Yeah, but also on that retirement question, everybody just think you've got to understand, again, I can't stress this enough, the cost of living increase. If you do have a retirement plan many things, including having that perpetual income, passive income basis, and think about finding a cheap place to live that's both safe and has good medical and all that type of stuff. So a lot of people don't think about this. Like, I'm going to plan a retirement in New York City or San Francisco or, London. These aren't the places to retire. Guy probably knows that too. But if you move like 50 miles out of town, you can live for a third of the price. So this is the other part of the plan that people need to think about too.
Yeah, I agree. This is exactly what happened to me. Teenage son told me to buy Bitcoin was at 3K. I bought it around 50K. Let me ask you this, Guy, when's the first time you heard about crypto, and did you pass on it or did you jump on it?
I first heard about it in 2013. So I went down to a pub in East London, and that part of East London where I was living at the time was very, very trendy. It was right kind of at the cutting edge of right now. And this pub had a sign behind the bar saying "We accept Bitcoin," and I was, I just saw it, and it was just a moment, and I just asked the asked the barmaid, and she didn't really know. She's always like, well, it's digital money. And I was like, okay. So fortunately, when I got home that evening, I hadn't had so much to drink that I could remember what she said. And I started looking into it then. But I mean, I must say, like, around that time, I started looking into it. That was when Mount Gox was happening. That implosion. There was a heck of a lot of FUD flying around. Plenty of people out there who thought it was going to zero. So it was a while before. It was a few months before I actually bought in, because I was just. There was so much negative press around it. I had to let the fundamentals, I had to get those fundamentals into my brain and let them sort of shine through the fog of everything else before I was ready to go in. So I mean, I could have got in earlier, but hey, it's everyone's story, isn't it?
Yeah, I think so. And then James, I'll ask you, but so now everybody knows that Guy got in at 2014. So not only does he have the biggest channel on YouTube, also a billionaire. Look at that. James, what do you got?
Well, I dabbled in 2017 and I was watching it very carefully because I was fascinated by the economics behind it, the project. But I was very suspicious because it didn't have any kind of mainstream adoption. So I was gun shy. And then when I saw it going to 20K, because I had a tiny piece, and I was like, damn, I missed it. But I'm smart enough to know not to chase. I always say don't chase, replace. So I didn't chase. And thank God I didn't. And then I started, after it crashed back down to like 3K or whatever, I started, well, you know what? It's worth putting a small allocation, like 1% into this. Then when C19 happened, I was actually in a big cash position late 2019 because I was expecting another type of crisis, but I was also studying up on the C19 stuff. And I was ready to deploy a lot of cash. And then the day that C19 crash happened, I just jumped in hard. I said, I missed it in 2017, but I'm getting it this time. And that was it. And same thing with the Ethereum. I didn't buy my first Ethereum till the same crash. So in at 90, average cost is about 200. So this is the thing, everybody, as well, is, when you get these opportunities, don't be fearful. And a huge part of this is psychology. I call it running into a burning building. Sometimes you got to do that. And that's when the big money is made. And, hold on to the winners as long as you can.
Yeah. And that's the big thing. Hold on the winners as long as you can. But of course, at some point, you can't diamond hands forever, which I guess this is actually a good lead in. What about buy, borrow, die? So this is something that we had talked about previously about taking loans out against your crypto. So you buy the crypto, instead of selling the crypto, you borrow against it, you put it into other assets and you let that grow. And then of course, if you die, then if you have everything in a trust, it goes to your kids and there's no taxation for that. It's pretty much used by the super rich or just kind of rich. And I will just tell you my example. I took out a loan with Celsius. And I know, James, you had Alex on the show. and it worked out pretty well. The thing is that you have to be aware of is that those margin calls, they come fast and they come furious. And if you don't have collateral in there, they will stop you out and they will sell everything. And of course, when that happens, when you take a loan against your crypto, it's not taxable in the US. I can't speak for every jurisdiction, but when they liquidate you, it is. And that could be short or long-term capital gains. So the thing you have to be aware of is, am I at the threshold if I'm going to loan against it? Or if I take too much, am I going to get stopped out? Any thoughts on that for you guys?
Well, I'm very excited about the fact that there's so much explosion in kind of DeFi and the enabling of borrowing against your crypto, borrowing against your Bitcoin or whatever else. It still is the Wild West. It's still early days yet. Be careful. But as I say, if Bitcoin's at a low price, like say 30K ballpark right now, and you've got 25% loan to equity, you're going to be safe. So that's what I think is amazing. I'm not quite ready to do that yet. I did a small little experiment once just for fun on Celsius to see if I could do it in California in real time and borrow money at 0%. And I could, and I was like mind blown. But yeah, just be careful. Manage your risk, everybody out there. But there'll come a time, this will be a much more mature place 3, 5, 8 years from now. And then that'll be a big part of your survival. So yes, the buy, borrow, die is definitely a great way to go. Borrow as much as you can. Remember, your fiat is debasing by 10 to 15% per year. If you can lock in a fixed rate of 2 or 3%, boom, do it all day long.
Yeah. All right, Guy, do you do any of that stuff, or is it just to buy and hold, DCA in, DCA out? Very simple.
Yeah, I'm much more cautious actually. I kind of hold on to this idea that's been sort of hammered into me since I was a kid, that debt is something to be avoided at all costs. And I absolutely take the benefits, see the benefits of the buy, borrow, die strategy. I still tend to err on the side of caution, but I've got hopefully many years ahead of me in that results in that case. So I'm certainly not ruling it out for the future.
Yeah, we all hope we do, but we'll see how it works out. I'm hoping too, but who knows? All right, and then let's see. This is a good one. Thoughts on Solana from each of you? Is Guy or Rob into stocks? What do you think about Tesla? Let's start with thoughts on Solana. I personally bought Solana. I still have Solana. It's in beta. We know it's in beta. And of course, everybody likes to ask this question to James, which is like the same thing that everybody likes to ask Cardano questions to me. There's some issues going around with when it went down for 4 hours yesterday. And we know that's true. But every single chain has some limiting factor. And if they didn't, there'd be the number one winner. We wouldn't have a problem. Ethereum has incredibly high gas fees, and that's not going to go away with the merge. Solana has those issues coming down, whether that be messages or whether that be just an overall slowdown or a complete stoppage. Cardano is still slow, and they're going to have an upgrade at the end of the month. We'll see how that works out. And then we have to see how much the stress test. Polkadot, EOS, Avalanche, all those ones, they all have something wrong with them right now. But as time goes on, I think it'll be better. James, I'll start with you. What do you think on that first one?
Yeah, well, first of all, I am not the Solana help desk. I keep saying that. I was buying Solana at $8 and $20 and at $35 to $32. And then during June and July, I made a bunch of videos about Solana. It's like $20, $20, $20. And I feel bad for the people that didn't get in at that time. But when you analyze all of the cryptos, and yes, I'm well aware of the outages and the problems, and this should not happen. This is really, really bad, and people are losing faith. But there's a couple of things to consider. One, it is, if you look at all of the cryptos where they are now compared to where they were 12 months ago, there's only one that is actually still double from where it was. And that is the one that will remain nameless. I'm not pumping it, not shilling it. I know people sometimes like Bitcoin, they buy at the top, they buy Solana. It went from $8 to $250 in a very short window of time. And that drives FOMO and irrational behavior, and people get stung. But also look at stuff, I spent a large part of my life last year. I was new to YouTube and I was just sharing what I saw. I spent literally 90% of my time slating cryptos because they had bad tokenomics, bad structure, everything else. And I became a very unpopular person. I never got one word of thank you for me keeping them out of things like Cadena and all this other stuff. So anyway, I was extremely choosy about what I invested in and did a lot of background homework and, built out the crypto compendium and the SCP profiler and all that type of stuff. And that has been very effective and it did work. But again, the question is, where are we going to go? It's really tough. I think the question was, Solana, will it survive? Right now, after it's not a Luna, that was a different type of situation. I think people will go to the chain that is the best, easiest, fastest, slickest to use with the most breadth of dApps. It's like going to a mall. That's it. If they can get out of beta, if they can fix their outage problem, listening to Anatoly, he believes they can, then that's what'll happen. It'll be survival of the fittest, cheapest, fastest. What that chain is, we don't know yet. Ethereum will be there in the future for sure, and I think there's a very good chance Solana will be too, as well as many others.
Yeah, and then before I get to you, Guy, just remember, nobody's perfect. I remember I did a nice little prediction of Bitcoin to 150K. That didn't happen. I put Voyager to $30. That didn't happen. And there's a lot of things that I've been wrong. Just ask my wife. So we just go forward and we try to do the best thing we can. And off we go. Guy, what do you think on this one?
I think Solana still has legs. Yeah, it's, as you say, it's still in beta. It's, I see these outages as battle testing of the network, and yeah, I mean, they're concerning. They're not a good look. It's not something we like to see. But as you also say, like every blockchain has its own its own weak points, its own failings, and these outages seem to be Solana's. I'm confident because they've got an enormous amount of backing.
Yeah,
they've got a heck of a lot of developers working on it. They've also, I mean, apparently it's actually quite difficult. It's one of the trickier ones to actually develop on. I think Anatoly said it's a bit like eating glass, which is interesting. So I mean, that would be my only real concern about it. But it's got this amazing TPS, which is attracting people to build on it. Those projects that are building on it are also attracted by all that capital that's behind it. And I mentioned in a live stream earlier today, actually, there's an interesting clip from the Algorand conference last November.
Yes.
And a bunch of VCs are talking there, and they kind of mention in passing that the institutions, they're not at all bothered about Solana's downtime. And for me, that says quite a lot. I think the smart money still believes in the project, and so do I.
Yeah, I got to say.
That's an excellent point, Guy. There's one other thing that I did notice as well, sorry, Rob, is if you look at, I analyze very carefully daily active users, weekly active users, monthly active users, and all the chains. Those users don't go away despite outages. They'll wait their 4 hours and say, yeah, okay. And then they're straight back to activity. And that was fascinating for me to see. I thought people would get pissed off and they just bounce to the next chain, but they don't.
Yeah, you know what it's like? It's like when the internet first came in and it took you like 30 minutes to download a picture, a JPEG. Remember those days? Dial-up, AOL, stuff like that. No one would take that, but it takes time to get things moving. I think that's where we have to go for. And then the last one, we'll finish this up, is Guy or Rob into stocks? I've got Mara, and I do have Tesla, and I've been dollar cost averaging Amazon since I got an Amazon FBA business. I'm excited about this because there's going to be a stock split, so we'll see how that works out. That's just me. Guy, stocks? Not your thing? Or yeah?
I have, a little bit in stocks. I like, I have a bit of a weakness for sort of very boring dividend payers. So for instance, Legal & General, a big sort of insurer, asset manager. I don't know if you guys have exposure to it in the US, but Legal & General is a big company over here, pays a very healthy dividend, but it's quite dull. So, I mean, I'm attracted to stocks like that, really, stocks that have, a fairly unexciting, but a dividend as well is important for me. I mean, obviously I understand the importance of a good growth stock, but, crypto tends to be more my growth stock.
And it's going to be huge, but I'm totally biased. And then lastly, Tesla. James, do you want to take this one for 30 minutes and talk about Tesla?
Give me 5 hours. Yeah, I mean, people doubt Elon Musk all the time, and they claim it's a very overvalued company. But once you start digging into what Tesla actually is, it's not a car company, and that's where the penny needs to drop for many people. But the way this man's mind works, the way he sleeps on a factory floor, on concrete floor for 3 years, the way he makes rockets land on their butts. I bought, in full disclosure, nearly 4 years ago, a Tesla X, and I've got FSD and everything else. Within a day or two of buying that car, I said, buy the car. I bought a bunch of call options because I was so blown away. And I had been driving BMWs for a quarter of a century exclusively. I was just absolutely mind blown. And the rest is history. So Tesla is a very special thing. Everybody needs a little bit of Tesla. Forget everything else. Forget the risk. Don't believe the FUD. Get a little piece of Tesla. And they do also have a 5-for-1 stock split, probably 5-for-1 coming up in August.
Perfect. More money. I'll take it. All right. Good deal. And then this one, hey, James, how you liking those California taxes? Are you still in California or are you out of there?
I don't disclose where I live.
Okay.
I bounce around a bit. But yeah, when you look at New York, Illinois, California, they're shooting themselves in the foot because it's not easy for people to up and leave. But you look at the people that pay the majority of the taxes, they've all gone. Like the Larry Ellisons of the world and the Elon Musks and the super wealthy VCs have all bounced over to where you are in Texas and the Carolinas and Florida and Nevada, all these places. Yeah. So they need to fix that big time, or else they'll have no taxpayers left.
No. They're doing New York's doing a great job. I like how they tax everybody, and then I believe they just passed a bill to ban some sorts of Bitcoin mining. Not sure if it's all of it. And that's great for Texas. I welcome all the Bitcoin miners to come here. We have got a great state. Also, we've got plenty of natural gas, wind, and solar. So come on down. We're building like crazy. Can't wait to see you.
By the way, I do have a personal question a good friend wanted you to ask Guy. And that is, it's like twofold. One, is the UK becoming more crypto friendly? And two, did they make you take down your posters in the subway?
Oh, interesting. Yeah, one is very much related to the other. Yeah, the UK is making noises. The Treasury earlier this week was making noises that it was considering sort of stepping in to rescue stablecoin companies that might go to the wall. This is obviously in the wake of UST, which was a positive noise, which was very good to see. Some sort of there's disconnect between the Treasury and I think other branches of the legislature. I mean, Rishi Sunak, the Chancellor, is an interesting figure because he is the tech bro incarnate. So a lot of us kind of felt that he would be the sort of person to not only understand crypto but also to be most likely to sort of try and open up the country to it. And he has been making noises in that direction. Part of the problem is that Rishi Sunak's brand has been really trashed in the last few months. It's revealed that his wife, who is absolutely loaded, is a non-dom, so is not paying any tax on the vast dividends that she gets from her father's firm. So, yeah, he's kind of a little bit in retreat at the moment, keeping it quiet. But yeah, I do get the sense that the UK, that the country is trying to come to terms with it. They are beginning to realise just how important it is and what an opportunity it is to open up to crypto companies and crypto in general. But we weren't forced to take our adverts down, no, but they sure as heck made it difficult for us to put them up, which was very frustrating. They were insisting that we put in large letters at the bottom, this crypto is a speculative asset and cryptocurrencies are unregulated, et cetera, et cetera, et cetera. And, they just wouldn't understand that we're not a cryptocurrency. Coin Bureau doesn't issue a coin or token or anything like that. We're a media company. We talk about cryptocurrency, So, but they couldn't get their head around that. They assumed that we were offering some sort of man-themed meme coin or something like that. So it was a bit frustrating. But yeah, they stayed up. We managed to get a discount on the sites because it was on the tube, and obviously it was locked down, so footfall was decreased. But yeah, it was a real saga, but it was an interesting one. It's certainly eye-opening.
Jeez Louise. See, this is why it's so paramount to have education and the right people in the right job for regulation. And that only comes through knowledge, because we just saw what it is. All right, guys, we're going in pretty late or pretty long. There's a couple of last ones and we'll get out of here because I know you guys are busy. This last one here, you guys I know you just did a video on this one, Guy, Luna 2.0. What do you think about the future of new Luna 2.0? I think this is an example for everybody. I got wrecked in Luna and UST, and now got the new Luna 2 airdrop. Is it worth holding on to or sell and get the money? First of all, can't give any financial advice. We're not financial advisors. But if it's you, we'll start with James. If it's you, James, where do you go with this?
If you get a free airdrop, always cash in your airdrop immediately and buy something with true value. So that's my take. The Luna 2 is going to be tarnished forever. It is a destroyed brand. Nobody will ever trust it again. Take your money and run. Not financial advice.
So,
Guy, what do you got? A little bit more?
I echo those sentiments 100%, including the not financial advice. Yeah. I've got no time for Luna 2. You know, Luna has happened. A lot of people have experienced a lot of pain. We need to learn the lessons and move on. And you know, one of those lessons involves not going near, you know, Luna 2, whatever it's planning to do or not do. Yeah, I'm if you get the airdrop, sell it, buy something good.
Yeah. And that just leads to the last point. And it's about, because a lot of people lost a lot of money. I've seen it in my comments, in my emails, and Twitter. Just remember, like we talked about, we talk about taking profits, but it's super important that you do those things along the way, because even I lost out. I dollar cost average into Luna since March. I sold a bunch in November, but I started up again in January, and I showed exactly how much I lost on my Twitter account. And it was not nice, but it is because we get greedy. So make sure you're doing your research as best as possible and taking those profits. And that is it. So, gentlemen, I want to say thanks again for stopping by. I really do appreciate it. If you guys look in the link in the description, there's a link to Guy at Coin Bureau, although I must say you probably subscribe to him anyhow. James is the same way. If you watch my channel, you probably watch James. But if you don't, there's a link in the description also to his Patreon and also to Guy's new channel, Coin Bureau Clips. Gentlemen, thanks so much.
Thank you, guys. And thank everybody in the audience, too.
Yes, thanks for watching, everyone. And thanks so much for having me. A real honor. Thank you.
Huge pleasure. We'll work on our poetry as well for next time, too.
Right on.
I need to go away and write one for you now, James.
All right.
Nice. All right, guys. Enjoy the weekend. I'll see you.
Have a great weekend, everyone.